So today we're going to be going over IPDA cycles and power of three and how they go hand in hand, how to use them with bias within MMXM deliveries, how to anticipate candle open low high close and vice versa. So yeah, let's get into it. So what are IPDA cycles? Right, there's 4 cycles, and the price is always doing one of the 4. So when it let's just classify expansion. So one of the 3 things happen after expansion. We all know what expansion is. But what happens after? Right? Retracement, consolidation, or reversal. Right? And then after consolidation, price can never reverse from a consolidation. If it looks like it is, this is AMD. Right? This is why sometimes we don't. Let me read the last part as well. Expansion, consolidation, manipulation. Right? So this is sometimes why we don't get AMD. Because after consolidation, we expand. But if we manipulate, this is AMD because we can't reverse from the consolidation. So this is the manipulation. What occurs after manipulation is distribution. All right, so it's accumulation, manipulation, distribution. If it doesn't do that, we expect straight distribution. And one thing, if it doesn't manipulate, if the other asset does, that's how we trade it. If there is no manipulation, it's with SMT. All right, so once I've said that, let's go to retracement. This is lower time frame LR into a key level. So let me go ahead and draw that to you. So it's just external range to internal range essentially. So right, this retracement back into discount key levels such as a fair value gap, we expect expansion to follow after. Just simple internal to external range run. Yeah, so that's this simple expansion, retracement, expansion. Reversal. We expect reversals after hitting a key level. SFT confirms reversals. Reversal expansions. This is exactly what we want to see and what we want to get in after. We can trade the reversal, with SMT, but after the reversal is put in, so the smart money reversal, we want to trade the low risk buy in the stages of distribution, and we can see that within these candle closes and power of three. So let's just get into power of three. The opening price of candles act as its own premium discount function. Buy below the open and sell above the open, right? So if I am, this is what I mean by that. Let's just say this candle opens here, right? And we already had our smart money reversal. So this open, low, high close that we are anticipating, the open, high, low, close refers to IPDA because we have reversal, expansion, retracement, expansion. You see how they go hand in hand? We can anticipate this candle to print an open, high, low, close because the previous candle manipulated. Okay. Why won't you delete? We're going to go over plenty of examples. Okay, we want to use and see what the previous candle has done in order to get a good idea of where the next candle is likely to draw. This is Fractal. We can use this with the previous week, day, session, and candle. It all reverts back to IPDA. It is an if this, then that approach. And I will show many examples of what I mean by that. When combining the two, IPDA plus power of 3, we can get accurate reads on where the next candle is likely to expand. Bullish example, if the previous candle retraces to discount and closes there, we anticipate open, low, high close, reversal, sweeping previous candle, low, ideally with SMT as confirmation. So this is an example of us opening. It can look many different ways, but let's just go with this. This is when we open inside of the premium, right? And then we sweep. Let's just say this is a 4-hour open is like up here or something, and the 1-hour close is right here. So we sweep the 1-hour high, put in an SMT, and we expect open high low close. Why? Because we opened inside a premium discount. So this is would be viewed as retracement on lower time frame, and this is the smart money reversal. Right? You have an SMT to anticipate the manipulation. Right? It's just like when we reverse off a previous day's high, but this in this case it would be like a 1-hour high. It's the same thing. Price is fractal. So that's what I mean by that example. What else we got? Oh, the other one. If the previous candle manipulates inside key level, we anticipate open, low, high, close, straight distribution because previous candle has manipulated. And I'm going to get into that right here. All right. So now we have some examples, some different examples. So this one is any time frame. So let's pretend it's the weekly time frame. All right, we hit a key level. Say this is like a fair value gap or something. All right, so when we come into here, or no, this is the candle that comes into it. So we sweep the previous candle, right? And we fail to displace. This would be viewed as manipulation. And ideally you want to see SMT either with the previous candle's high. You can have SMT on the 4-hour if you're going to use time frame alignment. You can have SMT with a swing point over here, something like that. It's kind of like CRT if you want to call it that, but it's the next day model is what we're referring to. And you can see we can view this as like the smart money reversal and the next two candles as distribution candles, right? This is what we really want to trade is this candle. We're going to barely put in a retracement because what happens after manipulation? Distribution, right? You're gonna see like if this is a weekly candle, a lot of times you're gonna see Monday high of the week. So this is why it's important to know what the previous week did because you may be longing to Monday's high, thinking that maybe Tuesday or Wednesday is going to be high of the week, and you're just taking unnecessary losses because you don't understand, right? And then we want to trade the fourth candle if the drawn liquidity is not taken, right? We can use standard deviations like this in lower time frame to guide us, right? Let's go to this day. So we can use this with our daily profiles and our daily bias. This is extremely, I guess, like sauce is really good. So if this, let's just say the previous day expanded, all right? So previous day expansion, and we get a retrace. Now, how do we know if it's a retracement, right? We can know if it comes into a key level, if there's SMT, right? With a previous high over here or something like that, or a daily profile. So we have the Asia being the low of the day and creating that wick of the higher time frame candle, and we have that SMT and CSD. And how do we confirm this as a reversal? SMP. So let's say the 10 a.m. opens for indices right here, right? So what occurred before? We want to always ask ourselves what occurred before. Let's say this is 9:30 open right here. All right, so 9:30 manipulation, 10:30 distribution, right? So we can expect an open high. I'll just put it like right here, so it makes sense. We can expect distribution, so open high, low, close, right? So this is why it's important, right? In that we technically be trading. No, we wouldn't. We would be trading the distribution candle because manipulation already occurred in this example. But let's say 10 a.m. opened here. You can trade this right here on a lower time frame as the manipulation candle, and it's because we have this SMT that confirms it. And then if 1400 opens, the next 4-hour candle right here, we'd be expecting open, high, low, close. Same thing as the other example because the 10 a.m. candle already manipulated. So we expect distribution to occur. All right, so now we go to the next day. Previous day retrace, this day expansion. Right, daily profile alignment, low of day is created inside of a fair value gap and SMT confirms it, the reversal or the expansion, right? We sweep the previous as low. We have Asia accumulation. It's a classic buy day, right? London takes out Asia's low and expands away. We trade the New York continuation. So it's literally just this expansion, retracement, expansion. You're going to see this a lot. I'm going to show examples of this, by the way. And then this is some more fractal stuff. But I mean, you can see this on the daily time frame on it by itself. But this is like a 4-hour example. All right, so let's just say we're bullish, right? You can view the stages of distribution, right? So let's just say this is the 2 a.m. candle, right? Low of the day, and then 6 a.m. retraces into a lower time frame range. So if 6 a.m. retraces, what do we expect 10 a.m. to do? Distribution, right, to the previous high. See how this is fractal? I can use this with the daily time frame. I can use the weekly time frame. I can use this with the sessions, like all that. Sorry. Okay, here we go. Right. And this would be viewed as the smart money reversal, especially if you have SMT with some low over here. Doesn't really matter where the SMT is. It can be with the previous candle's low. Doesn't matter, right? Right, we have that failure to displace. So we can say this next candle will distribute. But let's say, time doesn't meet price, and this candle opens at 2 a.m. So it closes at 6 a.m. So that's why we don't distribute, because that is London session and this indices. And then we get that 10 a.m. distribution. This would be viewed as the lowest buy because we have the smart money reversal, lower time frame break structure, and then you retrace, right, lowest buy, distribute, and then we have this wick is where you want to get in. I mean, you want to get in here too, but you want to get in here as well, right? So in phases of market maker models, you want to mark out your opening prices of your hourly and your 4-hour. And in this case, a lot of these cases is when we have a trading towards a draw on liquidity, and we're like high in premium, you want to buy below these opening prices, because what do? They act as, where's this shit at? Their own premium discount function right here. So we'd be selling, or sorry, we'd be buying below the open. And what do you want to see in a lower time frame? Right, fair value gaps somewhere inside of this body candle, and you're gonna have lower time frame. So if we open here, you're gonna have like lower time frame SMTs, like this maybe, or like this, with some low to the left inside of here. And this is where you want to get in when we CSD or whatever your intra model is, right? You want to get in on this breaker or whatever the hell you do. So yeah, that's kind of how you can keep it systematic and easy. Um, it's just waiting for these opening prices because you have the data of the previous candle, right? So when it closes, you have that data. And this is fractal, like I said. Previous candle already mitigated discount of lower time frame range, so we expect that distribution, right? Retracement to distribution or expansion, whatever you want to call it. So this would be viewed as the first stage, second stage, or this is really the first stage because of the first retracement after the lowest buy expansion. But anyways, let me shut up. So yeah, so let's go into some examples. So I'm here on FX replay. Oh my god. Let me turn this off. Alright, so Jesus Christ, dude. Get these out of the way. Oh yeah, we're down here. Ignore all this shit. It's really messy, but we're going to see in lower time frames. Alright, so what did the 6 a.m. candle do? You manipulated the 2 a.m. candle with SMT. Now it's dropped to lower time frame. I can even drop to 1 minute. Alright, so 9:30 open. All right, hold on. Why is it so dragged out? 30 opened here actually. Wait, no, opened here. I'm right. All right, so what happened before? So 9:30, right? Distribution higher or manipulation, sorry. And then once we expand lower, right? This retracement before 10 open is the low risk sell. And then where do we open? We open down here. So this retracement is the formation of the wick. We already know we're gonna enter on a open high, low close because of what 6 a.m. closed like. What do we have to target? This swing point. And what is this? Asia low of the day. So we have everything aligned here. And yeah, so we have this SMT. Like I said, you're gonna have SMT with the opening prices. And it's actually right here. SMT's right here. Forgot to draw that. You have this order block, right? This is your first stage, and then this little pullback is your second stage. And I'm entering off of these order blocks. I really could have entered off the most extreme order block, but I didn't. And yeah, so there's that. Now let's just go into like NQ. I already have some shit marked up. All right, so we're gonna start on the daily time frame, and I'm gonna show you the phases of price within these candles. So this week, let's go over this week. So Monday reaches the key level with SMT. So anytime you're going to do internal range, external range, you want to look at the daily SMTs, right? You're going to see it really easily, and that's going to give you higher probability MMXM deliveries. So Monday reaches this level. So now we're underneath the opening of the weekly candle. And then Tuesday we expand, right? And then what do we do throughout the week, right? So Friday we come up here, we create these relative equal highs. And you're going to see on the lower time frame. What do we do Monday of this week, right? We have that turtle soup model that I showed you guys, where we sweep a swing low, and then we have that next day model like we fail to close underneath the previous candle, and we have SMT. So this is viewed as manipulation. So why would we need to go and take Monday's low out? We already expect this to be the smart money reversal and expansion throughout the week, right? And you see this little retracement? It's your lowest buy on a lower time frame, right? And then we expand throughout the week. Um, and yeah, so let's go to the 4 hour. You can see a lot better. I have all sorts of SMTs marked out and stuff. All right. So what do we do this day? 2 a.m. puts in the low of the day, and then we get that 6 a.m. retrace, right? Not quite to premium discount, and then we expand throughout the day. Now, why the next day? So we have expansion, retracement. How do we know if it's going to retrace? SMT. What high is this? 2 a.m. Right? London high of the day, and this is where we get this retrace. And then what happens after retrace? We expand. Right? See these IPDA coming into play here, right? We expand, and then what happened this previous day? We already, this is like a lower time frame. You can see within the candles. We already what do you call it? Rebalanced discount of this range, so we can expect 1400 to expand to this draw liquidity. Does that make sense? This is what I was referring to with what the previous candle did. Right? We can see that it swept this candle's low, 6 a.m., right? Dug this order block and came into premium. So we can expect expansion. So you're going to see it within the daily, you're going to see it within the candles themselves. It's all IPDA. And we can trade the power of threes of those. So this little retracement, right, this is where you want to get in all lower time frame. Right, so what happens this day? How do we know that's going to reverse? Well, where is Asia located? It's located down here. We have that SMT into a key level. Right now we can expect after expansion reversal. Now on the other asset we reverse completely. But look what happens this day. This is Monday. We have one of my models here, old fair value gap, swing point, formed inside that fair value gap, sweep that with SMT. Now we can assume that we're going to be bearish. So we can actually trade this 10 a.m. power of 3. Why? Because of the SMT. Like I said, once we are in premium discount, we will sweep that candle's low, and then we can trade that as a power of 3, right? And then as you see, this is like smart money reversal, expansion, and then this next candle will expand as well. And look what happens here. Look where the low of the day is formed. We always want to know where the low of the day and the high of the day is formed. It is formed inside of premium discount. So we have an intraday IPDA cycle within profiles. So we have Asia high of the day. We have retracement, right? And we have that New York reversal. I don't know actually if this is New York. We have that reversal. So retracement with SMT. So that confirms it, right? What do? We sweep that candle's low inside of premium discount. Maybe there's some lower time frame fair value gaps here. And then where's 10 a.m. open? What happened before 10 a.m.? Right, we already reached discount, right? So now we can expand throughout the day towards these failure swings, right? Right, and then what happens here? Right, more intraday stuff. We kind of just consolidate, and then we have 6 a.m. What did 6 a.m. do? Right, manipulated a low, and tapped a fair value gap with SMT. So what can we do with that 10 a.m.? We can expect distribution, right? Here, same thing that previous is high. We kind of have this slow retracement. Ideally, you want a deeper one, but I mean, what do we have up here? Asia high again, using daily profiles. We have the London retrace and then New York, same thing. Oh wait, no, what the fuck? This must be like a holiday or something. Oh yeah, it's July 4th, my bad. So this is 1800, Asia low of the day. We expand. So how do we know that we're going to, right? How do we know what this candle is going to do? Right, just SMT. Now I'm not going to trade this candle because it's 6 a.m. But we're going to use that 6 a.m. candle to gather data. So on a lower time frame, you can project and see how far this 10 a.m. candle will go. I'm not going to tell you that I would know exactly where this is going to go, especially after the previous day had such a large expansion. This is not really ideal. You don't really want to be buying after these huge expansion days, but I mean, that's in queue for you right now. So all-time highs. But yeah, the 6 a.m. candle manipulated with SMT, so that's why we can expect at the very least that this 6 a.m. candle high is going to go. But we can project this manipulation on lower time frame for the 10 a.m. candle. And this is where the open low high closes. You want to get in on this candle. You have that immediate rebalance, right? And then, yeah, you can get in. So let's go to Monday. We have that new week opening gap. There's really no manipulation here. And I don't know if there's any SMT. Monday didn't make a whole lot of sense to me because Friday didn't manipulate. So I wouldn't even trade Monday. This is when like I don't trade Mondays. I would trade Monday if Friday manipulated or the previous week manipulated because Monday can be the low of the week. But this, I wouldn't trade. This is when I don't trade Mondays, me personally. So we have some SMT down here. Okay, here's the SMT. All right, so we hit that. This is the candle you want to trade. It would be this one, the 1400. Right, when it comes down, you have that SMT. Right, previous candle hit this inverted new week opening gap. Again, is it A plus? No, not really. But yeah, that's the trade that I would take. I wouldn't even take this one, I don't think, just because there's no manipulation. But yeah, this SMT would be enough for me to go long. So what does next day do after expanding this previous day? We, first of all, do we have any SMT for this pullback? I just want to know. I don't remember. Okay, we do. It's kind of weird. So I would only trade ES. I don't really trade ES. But you see how we manipulated here? I'm not going to trade this candle lower because it opens way down here. You see the SMT? I'm not explaining this. The SMT is right here. You see that? Right, so I wouldn't trade this. I would trade maybe this because I have something to target. I had the previous candle's low to target. If you're going to trade this candle here, I mean, you already have this candle, but it's already positioned inside a premium discount. So this next day is, this was today, is very anticipatable. Because what did the previous day do? We retraced, right? Retrace, so what do we expect? Where does this candle open? Right here. It opens in the middle of a market maker model from this smart universal low, because we have S&P here, right? Oh yeah, we have S&P here, so I won't trade that. But yeah, we have S&P here and here. So it's kind of like internal, right, to external here. And then 6 a.m., what did the previous 6 a.m. candle do? Right, it's changed the state delivery. So now we can expect distribution. Right, what did now this do? We open low. So why do we put in a low here? Why do we manipulate lower? Because we didn't really manipulate this candle. Right, so now we have this manipulation, and we have that SMT to confirm it. So you want to get involved in here. So yeah, hopefully that makes sense, guys. I want to show you guys briefly, like maybe a Monday or like the previous week manipulating or reaching a key level. So we can look at this one here maybe. Right, what does this previous week do? Hits a key level. Right, so what do we expect? Right, just going up to IPDA, we have retracement, manipulation on Friday, like I said, and then Monday can be the low of the week, as you see here, and then distribution throughout the week. Now, as soon as you take out this draw on liquidity, what happens after that? Retracements, right? Reversals, all that. So anytime you take out the high in a market maker model, like this, right? I just wouldn't trade, in my opinion, unless there is some draw on liquidity, like right here or something. But there's really nothing. So, like for example, like since you have this draw on liquidity here on lower time frames, we're taking out like highs and stuff. So it's okay to still, long inside of like lower time frame premium areas because we have this draw on liquidity. Does that make sense? As soon as this gets taken, we don't really have that, right? We don't really have a higher time frame draw on liquidity. So yeah. So yeah, hopefully that makes sense. If you guys want more videos like this, or just I can do like entries next, I think, or weekly profiles and go into more stuff like this, what I just showed you. But yeah, I'm just gonna end the video. It's been pretty long, I bet. So yeah, let me know what y'all think and what you guys want next. And yeah, see y'all later.